Hey, what is going on, guys? Edward here, back with another video. Thank you so much for being here again. On today's episode, I wanted to actually answer one of like one of the most repeated question I get all the time from a lot of students, new people coming in, even on YouTube as well. So people are asking me, Eduardo, oh, personally, can you tell me which time frame is the best? Like which time frame can I stick to? Like, do I only need one time frame? Should I only stick to one time frame, or should I, or do I have to learn, or like every single time frame? Like, what should I do? Because it's so confusing. And the simple answer to that, like just like right away, straightforward, there is no best. There is no best time frame. Like, unfortunately, and I'm saying unfortunately because yes, you have to work. You have to do the work. Like, you are not gonna be um, finding really good entries if you only stick to one time frame. To be honest, why? Because we normally try to have a very small lot size and very small stop loss. I'm sorry, right? Um, and a nice juicy risk ratio, right? Nice risk to reward ratio, so a nice take profit. So in order to get that, you cannot just go, let's say, hold on, you cannot just go directly to the, I don't know, to the H1, right, or to the 1 hour time frame, and then just spot your entries right away. I'm not saying you can't. This is, yeah, possibly, like, physically you can definitely do it, right? You can literally make an entry on a 1 hour, right? Just paying attention to a 1 hour. But the idea is to have a really nice entry in a smaller, always in a smaller time frame, and to look for more confirmations, because maybe entering on a one single time frame, you need, remember that as a trader you need a lot of confluences before you jump into a trade, right? So it's always good to have some idea to where the market is going. Let's say, just an example, and this is something that you can also maybe relate to. Like, if you are on a daily time frame, right? For this example, I'm just in Euro USD. You could do this in anywhere, but for this example, I'm in your Euro USD. You cannot go from the daily time frame down to the 1 minute and just make your entry. No, because it's kind of stupid, and I'll tell you why. So this is a daily. I'm on a daily time frame right now, right? If you zoom in to this zone right now on a 1 minute time frame, what would you do here? Where would you be looking for? You want to go selling because you know that it's a downtrend, right? Do you really want to go selling, or what? It's a 1 minute right there. It's crazy. Like, the market can literally just push up a little bit and then it will stop you out, right? Before actually coming to the downside, right? Maybe pull back a little bit and then actually drop, right? But it's ridiculous and it's stupid to go from the daily time frame, from a big time frame, straight forward to the 1 minute. No, you cannot do that. So I just have a little box right here, and that maybe you can try this. You can test it out, see if it works for you, right? Because that's another thing. Based on your analysis, based on your strategy, on the plan that you have, it may or may not work for you. If you're looking for swing trading, if you're looking for scalping, all of that stuff, So I just have this little box. If you wanna make an entry and you're watching on a daily time frame, I recommend you watch on a daily time frame first. Let's say you're spotting an auto block on a daily time frame, right? And then to make your entry, you can go on an H4. So you can jump from the daily time frame to H4 to make your entry, at least. And it's still, like, on H4, believe me, there is a long stop loss. That, like, the stop loss, you're gonna be risking a lot, right? Or, if you're swing trading and you want to take the chances, okay, it's up to you. But at least this is the best thing I can tell you. If you are in a daily time frame, okay, you can spot, like, for example, here we know that the market is bearish. We're definitely seeing the market is bearish. It's creating all the time. We have a lower low, lower high, lower low, lower high, and so on, lower low, right? Price keeps falling. So let's try to draw on a daily time frame, just right here. We're going to try to draw some order blocks, okay? The order blocks that we can see. Every time the price drops, right, we're going to follow the aggressive sell. So there, that's a nice order block right there, but it was never mitigated. The market never reached it. That's fine. That is going to happen. Let's see, price also dropped here. Had a nice drop, never mitigated. That's fine. And then it had perhaps this one right here, never mitigated. That's fine. And we had this one right here, never mitigated. We have this potential right here. This one did get mitigated. I will go into a little bit into this ones just to explain you well. Right here we have another order block right there, right? This one got mitigated. You see, sometimes some order blocks, they will not get mitigated, right? That is going to happen. It's part of the game. That will happen. So don't get frustrated. Oh my God, this order block is so beautiful. Why the hell the market didn't reach it? It's because it didn't reach it. It's just that's it. Maybe the market was so weak right here, then maybe at some point, I don't know, some type of news or something. Whatever can happen. Remember, we don't control. No matter what setup you have, no matter what strategy you have, no matter which concept you're trying to follow, nothing is going to work 100% of the time. So forget about that, all right? Not all the time market is going to go to where you want it. We're just trying to follow, right? So market is creating order blocks. So which order blocks should you take? So as I mentioned, you are in a daily time frame right here. Let's say this order block. This order block was really nice. You had imbalance. Also this one, a little imbalance right there, but also you have imbalance at the top. So these two order blocks, before the market pulled back, dropped. That's another thing you have to understand. The market, how or where does the market actually make the money? How do they make the money? Is by taking liquidity, right? The markets have to take liquidity. They have to take liquidity. So normally, a liquidity, or let's say inducement, for example, they will happen all the time. So this could be called either liquidity, or you can call it inducement. Two things are exactly the same. So the market will induce. What is that? The market will push up to wipe out this lower highs right there. So this could be early sellers. They will wipe them out to then continue actually selling. So before actually crashing, the market has to make money. So they make money by wiping these guys out. After they grab all that money, that liquidity, they at that point, that's when they are ready to sell. Right? I hope it makes sense. So you go from the daily, right? You know that the market is building up liquidity. The market is consolidating right here after dropping here aggressively. So what you do is you go from daily to the H4 and try to find your entry. Now, you can make right here, you can make an entry if you want. What I normally do, to be honest, is even because this is what make perhaps a professional trader even more accurate. I don't normally go from the daily to the H4 only. I keep zooming in all the time. Then I go from the H4 to the 15 minute, or H4 to the 1 hour, and so on, all the way. If it's possible, I can just keep going down all the way to the 1 minute. But I just don't go right away. And I hope you'll see what I mean by not going directly from the daily to the 1 minute. You have to check all these time frames, guys. Unfortunately, you have to check it. I'm saying unfortunately because I know it's you might say, holy shit, I have to check the daily, the H4, the H1, the 15 minute, the 5 minute, the 1 minute. Are you kidding me? And unfortunately, yes, sir. Like, you have to do this job. You have to do this work. If you really want to catch a sniper, if you really want to catch a really juicy entry, you have to do it. So there is no best time to only stick to only one. So where am I right now? I'm on an H4, right? On H4, my job is to spot a better confirmation to just jump in, right? You can definitely do this. You can get into this sell right here, right? Place a stop below this low. Normally the target, because I know that on the daily time frame, we're bearish. We're still bearish. So market, it has just recently dropped aggressively. It's just pulling back to take liquidity. After taking liquidity, will most likely react to this order block to then drop. If it fails here, maybe this one is going to catch it. Either one of these two, the market will take it. Okay, normally this one, I would be very cautious with the first order block that forms, because I have to see the liquidity. If I don't see liquidity, be careful, because you could be the liquidity. The liquidity could actually be right here on top. So so be careful with this, okay, because you could be the liquidity. If you're not seeing the liquidity, you could be the one. So market can actually push up higher, taking these guys out before actually crashing. Okay, so have that in mind. Okay, so on H4 now, I'm going to the daily, from the daily to the H4. Do you see an entry right here? You look at the stop loss. Is still H4, right? We're still on a 4-hour time frame. The stop loss is still big. The risk to reward is nice. I mean, it's 1 to 4, 1 to 4.46. That's a nice risk to reward. But hey, we really want to kill this thing. We really want to master this. Like, we really want to catch a very small time frame entry to get the most out of this trade. Normally my target is here. I'm gonna put this line here, right? My target would be at this low, right? So let's try to go now to the H1, to the 1 hour, and let's see if the market is actually showing me another nice entry on H1. Now look at what's happening. The market has reacted. You have to wait for the reaction, guys. That's another thing, and that's why I'm saying you should not be entering just right away on one order block. No, like just placing right away the sell limit order, not right away. I don't recommend you. You can do it. You can still do it, but I don't recommend you. What you always want to look for more confirmations. What more confirmations? You want to see the market actually reacting at least a little bit, or you kind of want to see aggressive selling happening in that freaking zone, you know, before you actually jump in. You don't want to be, oh, you see how strong the market was right here, how bullish it was, right? This could have easily just continued pushing up and stop you up. So you don't want to do that. What happened? The market all of a sudden stopped, and look at that big ass sell, like that nice aggressive sell right there. That created an order block. Now look at what's happening. Now I'm on the 1 hour, right? I'm on a 1 hour, not demand, supply. So I'm on a 1 hour. Now look what I'm going to do. Now your entry on an H4 was right here. Look at the stop, how big it was. Now look, if you go now, because you were a little bit more patient, and now you waited for that 1 hour, and now you're seeing that order block right here. Look at what's happening. Now look how the stop loss has actually reduced. Your stop loss is very little now. Where is your TP? Your TP is still at the bottom. You are not moving the TP, you're moving the stop loss. So what is the risk to reward now? Look at this. 1 to 10. You went from the 1 to 4 to a 1 to 10 risk to reward now, right? So, and that's a 1 hour. That's a 1 hour time frame. Let's see how that would look. I don't know how this would look on a 15 minute. Let's see on a 15 minute, like what the market can actually give me. Maybe it can give me a much better order block or second position. Sometimes the more order blocks you can find, you know, all of that change of character. Let's see, where are we here? I'm not sure if the market, okay, yeah. All right, no, there wasn't, at least right here, there was no another order block. Just that one on the H1. So basically 2 order blocks. We spotted one on the daily. Second order block was actually on the H1, on a 1 hour time frame. After that, the market just freaking melted. Look at that. There wasn't another order block right here that we could perhaps re-enter. In this case, the market just came up, boom. Take this guys out, take this liquidity, right? This is an inducement right here, basically, or liquidity, whatever you want to call it. At this point, the market took this, guys. At this point, you can call it that, right? It wipes them out before actually crashing. Always, guys, the market has to make money, so the markets will actually grab liquidity. It will take liquidity before it drops. Now, you see 2 order blocks dropping, 2 order blocks telling me to sell. So you can still, and let me just keep going in this area now. This was definitely a really nice sell right there. Let's see what position we can get now at this point. We spotted that daily. Was it daily, right? Yeah, it was a daily order block. This daily order block right there. Let's go to the 4 hour and let's see if the market gave us something. Right here on a 4 hour, we see an aggressive sell immediately, like nice reaction, then pull back, prices started dropping now. So we're seeing change of character, all of that. But on a 4 hour, we still don't have an actual order block to jump in. Let's see to 1 hour. Let's see on 1 hour, how is it looking? So 1 hour, okay, we have, the market had dropped right here, really nice. Maybe this was an order block on a 1 hour. It never got mitigated. And then we had another drop here. Maybe, I don't want to say, but this one is not too attractive to me because it doesn't have imbalance. And to be honest, I don't know if I would have taken this one. On 15 minute at least, on a 1 hour, it's not looking good. Let's see how this zone looks on a 15 minute, how this drop. I want to see how that drop looks on a 15 minute. Maybe it's going to give us a better entry. Let's see. We know now that the market is, of course, reacting, right, to that 4 hour zone. It's reacting. So let's say you missed it. Let's say you didn't jump in because you wanted to spot another confirmation to jump in before actually getting your sell on an H4. You want to wait a little bit more and to wait for at least another order block. Let's say you want to wait for another order block on a smaller time frame. So on 15 minute we have a pull, you have a push, pull back, push right here. There's nothing much. You see this, there was a potential order block right here, but you see that this order block has no imbalance. So I recommend you also being very picky when it comes to that. You wait for the imbalance. Right here, the market then starts pushing up. Yes, it starts struggling right here. And this is struggle. And this is struggle in this area. Right here, market was trying to break above 3 times in there. What do we see? Let's see if we can spot perhaps our entry. This is very tricky, guys. At this point, you know, if you really want to cash this, you gotta work. Like this is of course, it is just a pullback, right? It could have created perhaps a bearish flag, right? Nice breakout of the flag right there. Look at on the 15 minute. On this nice breakout, the breakout happened after this candle right here, this little one. Nice order block right there, nice little order block. That order block looks like it didn't get mitigated. That's fine. If it missed it, it missed it. It happened. Maybe that one was, I don't know, it was on a this broker right here, Forex.com. Maybe this broker, it didn't reach it. Maybe yours would have reached it. But let's say it didn't get activated. Okay, no problem. You want to wait for the actual order block to jump in. You're not following at this point. Let's forget about the flag, or let's forget about just simple price action. We're trying to do smart money right now, so we want to wait and just enter on the actual flag, and not the flag. I'm sorry, on the actual order block. What am I saying? So price started dropping, had another pullback. We see a potential order block right here. The market did not came up to mitigate. Price keeps dropping, not much more movement right here. Maybe this aggressive move. This was a big. This right here was a big zone. Maybe too big for my liking. I would say I would actually take this candle. That's another block as well. But then dropping, started consolidating. Not much happening there. aggressive sale at this point. Look at how big that candle was. The market did actually react it right here. This order block was actually mitigated. We should be looking for sales because you know that now at this point we are on a downtrend on a daily time frame, right? So sales are normally more attractive, and because you know that in a 1 hour the market had already reached this order block. But look at how far we are. Like, we're very late. It literally looks like we're very far away. The market reacted to this zone, right, to this H4, and now we're right here, you see? But it's still, even right here at this point, the market is still giving you a nice opportunity to go sell it. And in fact, look at what happened after that. Like, you could have aimed, if you would have entered on that one, maybe aiming this low, right? That was the actual target that would have been from here, to this low. So 1 to 17 risk reward right there, right? We're still, we believe that the market will continue most likely because it's reacting to that 4 hour zone, right? Again, let me go back to the 4 hour. To the daily, I'm sorry, that's the daily. Right, market is already reacting to that zone right there. So when you're scaling in the smaller time frames, you see that I cannot just make a decision on H4. I have to be zooming in. H1, 15 minutes. I have to keep looking. Look at what happened in this drop now on H1. Let's say you missed this move. Let's say you missed it. Now you keep looking on H1, and now you see you have another opportunity. The market will always show opportunities. This is H1, right? Where do we have the liquidity or inducement? Right here, above this highs. The market has taken the liquidity. The market pushed up, you see? Nice little push to the upside, activating the order block, drop. Now let's go right here. Let's say you don't want to jump in. Again, same thing. You don't want to do this. You don't want to jump in there and take profit at least to this previous low. You don't want to jump there because, I mean, it's still nice 1 to 5 risk reward, but right here you are in a 1 hour, so you're kind of risking a little bit too much. You want to see if you can enter on smaller time frames. So let's see 15-minute time frame. 15-minute time frame, the price dropped very aggressive. There's no potential order block right there or a nice order block that we could have caught. Nothing. Let's go 5-minute. 5-minute time frame. I don't know. I'm seeing this order block right here potentially on a 5-minute right there, but it doesn't have imbalance right here. Maybe this candle has some imbalance, but I will see on a 1 minute. Let's see how it looks on a 1 minute. Let's see if we can catch something a lot better. So 1 minute, we see that it starts reacting. Yeah, look at this. Markets react. Even right here, you see that after the price touches the 1 hour order block, of course, this is nice BOS right here, nice breakout structure to the upside right there. It pushes up, all of a sudden the price start failing. The price fails right here to keep creating new highs and start breaking, going to the downside, boom, and a breakout. So in this area we do have, the market has broken these lows. You see from here, broke these lows. It's a 1 minute. This already, we are right here on a 1 minute time frame. So this could be our change of character right here. Where is an aggressive sell that you want to see? Right here, you really want to catch imbalance. So this one doesn't, this one doesn't. This, you see, from this pullback, the market did push up a little bit, drop. So this zone right here is definitely nice. That I would take this little one at the top. right, as the previous. Why should I not take this one? You can, you definitely can, but when a candle is like this, like very small at the top, and when it's like a pin bar right there, I normally like either covering all of it. I might actually do this. I might actually cover this little one. It's very small anyways. This is a like 1 minute time frame right here. So by this point, I mean, the stop is very tight. Come on, it's very little, like very, very little. And even if you put it a little higher, just to make sure you don't want to get stopped out, you know, just put it, that's fine, put a little higher. That could be a nice entry right there, and that little pullback. You know the market has already shown the reaction on a 1 hour. So look, your entry is a little late. I know it's a little late. That's fine. But your risk to reward is going to be humongous, like enormous. Right here, look at the risk to reward on this one, right? If you entered right here aggressively, right? So 1 to 5. In comparison to this one, you were a little bit more patient, and now you caught this one, a 1 to 26 risk to reward. You can, if you're risking, come on, if you're risking 2% per trade, I'm sure you more than double here, or you almost double, depending on the size of your account right there. With a 1 to 26, and you're risking 2%. Come on. So, and you know that in overall, look at this, the market, we're still bearish. The market is actually coming from reacting recently to an order block on a daily, right? It reacted on a daily order block. So you know the market is still bearish. So you patiently wait for an order block to be formed to the downside, so you can actually catch and continue with the sell. Okay, so you see, there is no single one time frame. Like if you want to only stick to the 5 minute, you only want to stick to the 15 minute. No, there is no best time frame. Maybe you can make it the best time frame for you based on the strategy that you have. If you have a 5 minute time frame strategy, scalping strategy, something that you build, okay, that's something different because you build it up. If you have a plan, you can build up your plan based on that, right? On that time frame. So if you want to follow just the 5 minute time frame, and you have a strategy based on that, all right, fine. But in overall, depending on what you're trying to do, there's definitely no best time frame. You can make it your own. You can make it the best time frame for you based on your strategy. I hope it makes sense, guys, and I hope I'm not confusing you right here, but trying to be very clear and to understand there is no best time frame. If you want to stick to, because I know even you can just look on YouTube and you'll find out there's some YouTubers saying, okay, this is a 5 minute strategy only. Okay, if you have a strategy that is based all your analysis and everything is set up to play really well after testing, after back testing and all that stuff, and it plays very well during 5 minute only, okay, then stick to that, right? But it's gonna be based on the strategy. So I hope it makes sense, guys. I hope you find value in these videos, and if you wanna give it a big thumbs up. It motivates me to keep posting videos for you like this, because I know you guys love this type of content. I want to always try to answer your questions as well. So make sure to also follow me on the community right here on Telegram. I do post content on my channel right here. I do post setups as well. So if you guys are interested, just go ahead and check it out. This is free. And if you want to be part of the actual VIP group that I have as well, go to my website, teamprofitsenglish.com. You will find out that I'm offering a bundle right now, which it comes with my course, my mentorship, and a free VIP signal group for life. It's VIP signal group for life, I'm sorry. And it's a one-time payment, right? There's a 20% discount right now. If you want to check it out, just go ahead and take a look. So thanks again, guys, for watching, and I will see you in the next one. Take it easy.